You're tuned in to the Dakota Housing Network on SuperTalk 1270 and SuperTalk1270.com. In-depth discussion and analysis of real estate issues nationwide and those issues unique to our area. Our team of experts includes Joe Sheehan, Greg Larson, Dave Floor, Brian Ritter, and a great variety of guests. The Dakota Housing Network begins now on SuperTalk 1270 and SuperTalk1270.com.
All right, good morning. Who's running the show?
You are.
Okay, this is Dave Floor.
Who's running the asylum here?
Dakota Housing Network. Greg Larson.
Yes, that would be me.
Jim Olson aboard. And then
Hello.
our long-lost seeker of lowest interest rates in the world, Joe Sheehan.
Out of the mortgage mobile and into your
I
cards.
brought the mobile mortgage unit screaming into the parking lot here today to make it.
All right. Guys, we have a problem today.
We do.
Usually we have our dumb guy or two dumb guys asking smart people questions.
Right.
We got three dumb guys in the room.
And no questions.
And who are we going to ask questions of? Jim, see, now this is where you're the wild card.
Oh, okay.
Because we could ask, you're a smart guy, and we could ask you questions.
I'm a wild card. I've been told that.
Or you can join the dumb guy crowd. It's your choice.
Yeah, I'll kind of walk the fine line here.
Okay, all right, okay. But I don't know, that's our dilemma today.
Okay, well,
we have to talk amongst ourselves.
So we have to delematize. Is that
but I'll tell you this: the road doesn't make you any smarter. So it's probably two dumb guys with a dumber guy now.
No, we haven't We haven't
dumb and dumber.
We haven't declassified you yet.
Does that create a dumber-est?
Well, here goes my audition on this show, so that'll be the end of that.
Well, I think you passed with flying colors.
So far.
Okay. So let's talk about the soaring interest rates.
Soaring.
I heard that. One pontiff said that the interest rates are soaring.
Well, not according to Freddie Mac's survey.
That's not what I read either, but that's
Freddie Mac's their survey. 30-year fixed rate mortgages fell 2 basis points this week.
Yeah.
But then they put a caveat on that. They said that with talk from the Federal Reserve Chairman Yellen touting broad-based economic expansion and third quarter GDP growth, that's actually caused rates to go up in the last couple of days. So Freddie knows their survey is out of date.
I just got done quoting a rate on a 15-year that was on. It was a refinance, but it was north of 3.75. Okay. And I haven't seen that in a long time.
Okay.
So that's
on the good news on the interest rate front,
but still. Good interest rate.
It's good interest rate. We're contrarian at North Dakota Housing. We actually lowered our rates today.
There you go.
We're down to 3.25.
Wow.
On government loans, 3.50 on conventional. So
you bringing back the 50-year?
Go get them. No.
Okay.
Not yet. Anyway. We'll leave that for somebody else to start that ball.
Stated income?
No.
No. Okay.
No,
all right.
Good. Thank you.
Okay. All right. So anyway, better grab your interest rate while it's there. Apparently,
because
it might go up. He says soaring.
That was the remark with the soaring interest rates. It's time to finance now.
Oh boy, yeah, soaring to 4%.
Yeah, where are they now? 3 point.
Well, Joe just said he quoted a 15-year at 3.75.
Yeah,
the 30-year would be just north of 4, I suppose.
Yeah,
on the market. So soaring.
Yeah,
we'll get there. Okay. Okay, anything else going on in the news? I would say interesting, Greg, real estate-wise?
Well, sure. We have some month-end stuff.
Yeah, okay. We'll get into. All right.
Yeah, you're also hearing this is a really down market in the Bismarck-Mandan area and most of North Dakota. The market is way off.
Mm-hmm.
Beg to differ.
Okay. Well, there's a whole bunch of homes for sale.
There are a ton of homes for sale. Yeah. That's the one thing. There is more over twice as much, almost 3 times as much inventory listed for sale right now as there was a year ago.
Mm-hmm. Okay.
So it looks, and it is, there's a lot of stuff out there, and it has become a buyer's market. And so sellers understand that things are a little different than they were even a year ago, 2 years ago for sure, in that buyers have choices and they don't feel the urgency to buy.
You mean
if interest rates soar, that might change things.
Yeah. Markets change. How about that?
Yeah, isn't that something?
A seller's market to buyer's market. We'll have a seller's market again, I bet.
And the thing to remember about interest rates, folks, is that we started off the conversation before we talked about property availability. is really what drives your ability to buy is the affordability index.
That's right.
It's the affordability index that really drives your. But really, the bottom line is when you go to buy a home, what's your payment? What can you afford? And when interest rates go up, it stabilizes home values. So really, the interest rate builds in a price. What you can guarantee with low interest rates is home prices go up. Mm-hmm. And so low interest rates. And when people talk about, wow, prices are really, man, they've really gone up on houses. Well, why? Because that's the price of the interest rate being built into the house. Yeah. And so as interest rates go up, what it does is it does slow the bill. It does slow how fast home prices go up. And really, it doesn't happen overnight, but interest rates and house prices equal out into what we call an affordability index. And so really what you want to focus on is your lifestyle, the house you want, and can you afford the payment? Does it fit in your budget?
Yeah,
so don't panic.
Yeah, and we talked about the affordability index here, and we're here in North Dakota and the Midwest generally. It's pretty affordable. Since
it's December 1st, I don't have the published numbers that usually come out the first week of the month from NAR. But last month, as we talked about the affordability indexes, they split it into four parts: East Coast, Left Coast, South, and Midwest. And traditionally, the Midwest has had the best affordability index, from a nationwide scale. Bismarck sometimes goes contrary to that, but we have still a good income-to-debt affordability index here. The last numbers, as I'm going from memory now, end of October, the affordability index for the East was like 1.11, which is getting pretty close to even odds because it starts at 1 and goes up or down, or 100, if you will. And the left coast, California, Oregon, Washington, a couple of those, that affordability index dropped by about 20 points down to about 1.19, 1.2. So they're experienced that what Joe says, low interest rates, booming house prices.
Well, but remember, that's all a part of the cycle because they were at depreciated house prices. Those house prices out there were under their values. They were under their values, and ours are at about their maximum values now. And so the one thing about our market is if you're buying, if you're shopping, look all the time because you might find some really good values while inventory is a little higher during the winter right now. Mm-hmm. But I'm going to tell you, just like everything else, as soon as the frost breaks and people get out of the holidays and all that stuff, that inventory is going to go quick. Yeah. So your chance to really maybe your chance to be the only person in the store looking at it and taking your time to buy it. Yeah. But come March, you might be one of 4 buyers putting an offer in on it. Right. And so things, they cycle, just like down there, house prices were low. Now they're booming with the interest rates. Yep. But they were undervalued at one point. Now they're coming back.
We got to quit.
We'll be going on a break, but we're going to talk CFPB, Consumer Financial Protection Bureau. We
love them.
Know who's in charge.
They're out for your best interests.
Yes, and we know who's in charge now.
I feel so good in the morning.
And then we'll also talk about tax reform and what it could potentially do to housing.
Right.
GSEs, Fannie Mae, Freddie Mac could be affected by what comes out of tax reform, so we'll get into that.
There is some nervousness.
Reform school.
Jim is playing Stevie Ray Vaughan for us this morning. What do we got?
Sweet little thing.
Pride and Joy.
There we go.
All right, we'll be back on the Dakota Housing Network.
Right now, 36.
The Red River Farm Network. Ag News is here on SuperTalk 1270.
All right, we're back on the Dakota Housing Network with a little Stevie Ray Vaughan. What are we doing, Jim? A little wing. That was done also by Hendricks. Yeah. Who else did that?
John Mayer did a good version.
John Mayer. Eric Clapton.
Richard Torrance.
Who is the Richard Torrance from Local?
Yeah.
Yeah, absolutely.
Right. Jennifer Lynn.
Yep.
Okay, there we go. We got it covered. Little wing is covered. Okay. Yeah. Dave Floor, Greg Larson, and Joe Sheehan. Back on the Dakota Housing Network. And, Greg, we were talking about affordability index and the market situation here locally. What else you got for that?
Well, in the Bismarck mandate in our market area and this radio coverage, the affordability index is really quite good when you take salaries. And as the Bakken picks up, it'll only get better. We are different from the nation in that we have a surplus of listings in western North Dakota. And that's going to be to the benefit of buyers for now. But as we talked about, that's going to change. One of the things that really changed our market, surprisingly, is last December. As you recall, we had blizzards, and the housing market just stopped, which is kind of normal. But it didn't do the bounce back that everyone expects will happen that accelerates the appreciation. Now, that doesn't mean we have a down market. We don't. The year to date, which is almost the year end, we're actually up in numbers of units of single-family homes sold. Prices are fairly stable across the board. There's a slight downtick, and as we've talked before, that is pushed by the upper-level houses that are coming down to because we just don't have buyers for that market. So,
and by upper level houses, you're talking about over 450 or
yes.
over 350.
Yes.
What's
over
that?
450.
Over 450.
Yeah.
Okay.
But the whole thing is stable. We're not seeing appreciation, and we're starting to see some seller concessions. Like I'll pay the buyer's closing costs to get the house sold. We're seeing that, but that doesn't indicate a down market. It indicates a stable market, not an appreciating market. And that's what happened last year. Was after December, we started seeing an appreciating market in February, March, and then it stopped, and then the drought didn't help, and then all these other things happened. So we have a stable market. It's not a market that a lot of people are used to because we've had an increasing market. So the affordability index has been real good here because we're not seeing any inflated home prices. We'll see what happens next year.
Well, people have asked me, they say, boy, housing must be slow. And I said, well, no, it's not. I mean,
same pace.
We're like at our agency, we're buying basically the same amount of loans as we did last year, and that's what we figured.
And that's what the statistics show.
And that's what this is showing. And I think it's the same. Fargo, Grand Forks, it's about the same.
But it
people
looks
ask
different
me because they say, well, there's so many homes on the market, and that one's been for sale for a long time. I go, that's
back to normal. Back to normal.
Exactly.
You mean back to normal? We're not gonna. Your house doesn't. Your house doesn't go up 20% in a year, and you don't sell your house in 6 days.
Yeah.
That's just back to normal.
Yeah.
That's just back to normal. But the good news for buyers, when you're just talking about that, everything you said right there is if you're thinking about buying a home, that was all good news. The other good news, which we're about to talk about, the CFPB change. The other good news, not only is there going to be change in the CFPB, which Dave's going to bring up in the next segment here, but also the credit box is opening. Guys, they're starting to reduce they're starting to increase our ability to use the guidelines to the borrower's advantage. Yeah. So they're interpreting them more flexibly to help us get more people approved, and that's important to know.
One of the big things is student loan, how they treat student loan debt, and what they have to. What an underwriter is going to look at for payment-wise on those student loan debts, right?
Yep. If you're concerned about getting approved, this is the best time to apply in 6 years.
Yeah,
absolutely. So it's a great time to buy. Period.
And if you don't apply it because you're concerned about getting approved, you won't know.
Exactly. You got to go ask.
Trust me, folks, you can't make that decision your own dang self unless you know you can't afford a house.
Yeah. Okay. Well, it's a great time to buy a home, and Joe brought up CFPB. Okay.
Yes, we did.
So the Consumer Financial Protection Bureau was run by Mr. Richard Cordray, or some people like to call him Mr. Corduroy.
Corduroy.
Yeah. What is the correct pronunciation? I hear both. It looks like it's Cordray.
I think it's Cordray.
I
think it's Cordray.
Cordray is correct, but
that's what you called him when we had him on the show.
But that might be why he's been so angry ever since.
Maybe.
Could be.
He torqued him off, and now he's leaving. He left.
He took his toys.
But anyway, he resigned, and
he's
been a very controversial leader of the bureau, which the bureau was created by the Frank Dodd Act, and basically given unmitigated oversight over lending. Mortgage lending, payday lending,
consumer finance, almost.
Consumer finance. I mean, they were car lending, everything.
They really did set up a dictatorship.
And most people would argue or say that they ruled by, not according to what they carried a heavy fist. Put it that way. They ruled by heavy authority. They fined people.
They regulated by enforcement. That's the exact term.
Yep.
The exact term that everybody had a problem with is that they regulated by enforcement.
Okay, thank you. That's the word I was looking for. And so Congress, Republicans in Congress hated the guy.
Mm-hmm.
They've been trying to get rid of him forever. Now he finally resigned. He's apparently, we don't know for sure, but has other political motives. You talk about running for governor of Ohio.
Right. Let's hope that spending some time out on the East Coast, he learned how to eat a pie.
Yeah.
Because that really messed up the last guy from Ohio that ran for president and governor.
So you may have heard about this in the past week in the news. He resigned. He appointed his deputy director as the acting director of the CFPB, which he's under the Frank Dodd Act. He had the authority to do
because he has all authority,
and all seeing, all knowing. He has no budget authority. He no oversight from Congress or anything like that. So
reports to the Federal Reserve.
He appoints this acting director who apparently was promoted without virtually no experience in running anything. He promotes her. Well, Mr. President Trump did not like that, and he appointed Mick Mulvaney, who was the budget OMB director.
Right, budget analyst.
Yeah, and under law, the president can appoint a current director of another agency to head another agency, which is what he did. So Mulvaney goes to work Monday morning. He walks in with donuts for the staff and walks up and gets himself in the office and says, and the lady who had been appointed by Cordray was, she sent out an email to staff that said, come to me with questions basically, and he said, do not talk to her.
Yeah. My name's on the door.
My name's on the door. I got donuts.
I got donuts.
And he even tweeted a picture later in the day of the empty donut boxes.
Right.
Funny.
And now she sued to get him removed, basically to stop Trump's appointment of Mulvaney. And a federal judge said no, the president has the authority, supersedes what the Frank Dodd Act
What a
says.
backdoor though, because to appoint. Because he can't just appoint a director. It was a back door where he could move directors, basically.
Move directors.
He could basically move. What a back door! What a back door!
Federal law.
I mean,
supersedes what the Frank Dodd Act
no
says.
wonder those people all go to the pot when they get there.
Yeah.
I mean, if you got to understand stuff like that, it's so backwards and not straightforward.
Well, as I understand it, all that Cordray could do was appoint an acting director.
Right.
He couldn't appoint the next director.
No, he cannot.
So it was appoint an acting director until the president appointed.
Right, and Congress has to.
And Congress has to approve it.
To approve it. Yep.
But, I
Let's go back.
clearly, since no judge would touch that, it was a real clear statement. And
Hot button.
Not much question.
Yeah.
Let's go back real quick and help listeners understand what it means to regulate by enforcement.
Yeah.
I want you to imagine that you're driving down a highway and there's no speed limit signs. There's cops all over.
Yep.
There's cops all over. And you ask them, well, what's the speed limit? They go, well, we expect you to be responsible. We expect you to be responsible, and we expect you to drive safely. Yeah. And then when you head up and you're doing 55, a cop pulls you over and goes, that's not it.
Yeah.
And then you go, and then you get back on the road and you go 45. Well, they don't tell you it's 25. You get back on the road and you go 45. Sorry, next cop pulls you over. That's not it.
So you get another big ticket.
And so that's what it means to regulate by enforcement. You got very little guidance about what the right way to do business was. There was almost no answers to the questions, do or don't do this. But what was is you got told when you did it wrong.
No.
But now, how do I do it right? Well, we can't tell you that.
No.
We just tell you when you do it wrong.
Here's some rules. You interpret them.
Right. So imagine if you were living your life where that would be a good example. I'm going down the highway. There are no speed limit signs, but there are cops everywhere to tell me that I'm not doing it right. Well, what can I drive? I can't tell you that. You just have to be safe. And that's the environment the banks have been under, and the mortgage industry in particular has been under since the appointment of Cordray.
Thank you very little.
Thank you very little.
Say to the CFPB. And Jim, what was that? Fat, drunk, and stupid.
Fat, drunk,
line?
and stupid.
Yeah. Okay.
Let's see if I can pull that up here.
Well, you find that for us.
Fat, drunk, and stupid is no way to go through life, son.
There it is.
Oh, okay. All right.
Played it.
So that's no way to go through life or enforcement
Right.
of regulations. Now, the other interesting thing is that Mulvaney now has basically frozen everything. He said no hiring, no regulatory things will be issued, nothing for at least 30 days as he will review stuff.
Right.
So it's like a freeze on things, which I think everybody will say thank you. But it'll be interesting what they do with the existing court cases that are out there. Now, there's a couple lenders, national lenders, that have kind of fought back against this. So anyway, we got to take a break on Dakota Housing Network, and we'll be back, and we're going out on Voodoo Child, another Hendrix cover by Stevie Ray.
Right now, 36.
Dave Ramsey is heard here. Super Talk 1270.
All right, we're back on the Dakota Housing Network, having a Texas flood.
That's right.
I'm Stevie Ray Vaughan here. Dave Floor, Greg Larson, and Joe Sheehan talking about the Consumer Financial Protection Bureau. You've probably seen it in the news in the last week, and it'll be interesting to see what happens going forward. The new director, who is official now because he's been officially approved by a judge that says yes, President Trump was correct in appointing him. It'd be interesting to see if he will be a figurehead, and he will bring in somebody else to kind of run the show. But also, right now he's got a freeze in place on all no new hires, no new regulation, no notices going out,
no new fines.
It'll be interesting to see what happens going forward because there are outstanding court
free for
cases.
all. It's a free for all.
There's outstanding court cases. A couple lenders fought back. PHH and Quicken have fought back against the Consumer Financial Bureau, and those are pending court cases. So it'll be interesting to see, do those get dropped by the CFPB?
All I know is I could hear some of the corks opening from here.
Oh,
I from here. I'm guessing there was not anybody approaching this as bad news in those offices.
That's the old deal. Yep, there's a new sheriff in town.
Yeah, I think so. So anyway, that's something to keep in mind. You know, whether that makes the national news again or not, probably not, because it's no controversy with the Trump administration. So
no, it's of intense interest to lenders, and vendors, but not the public.
It was intense interest to the media because it involved President Trump fighting against somebody else, and that made it interesting for a couple days.
Well, and the other reason why is because this, in the political scheme of things, this is Elizabeth Warren's baby.
Yeah.
The Consumer Financial Protection, and I got to talk to Betsy, who was the right hand from the Fed, who helped actually write the rules for the CFPB with Elizabeth Warren. So I mean, it's real. I mean, this is Elizabeth Warren's baby. I mean, this is her, like, this forever. In her legacy will be what she holds on to, what she did.
Yes.
And she was spurned by not getting the job. The idea was that she was going to write these rules and that she would have been running it, and she was on a mission to set the whole world right regarding consumer issues and financing, and so that's why this is such a big political powder keg, because Elizabeth Warren and Trump, last time I checked,
they weren't friends.
Yeah, it's
friends.
Right.
And she didn't get the job because of politics, because I figured she would not get approved by the Senate to run that agency at the time, so she lost out.
So a lot of hard feelings.
Yeah, she became a senator. So it'll be interesting to see from a lending perspective what happens with that, which does affect all consumers. So,
bottom line for consumers should be good.
Yeah,
should be good.
So. Yeah. There's rules in place that the Consumer Financial Protection Bureau put out there that made some changes that actually were probably positive. Mm-hmm. But there's been a lot of expense to put that stuff in place. So you don't want to see any of it go away. It's not going to go back to the Wild West in lending or anything like that, because the industry put too much money into changing and doing the compliance for this, and that they just status quo, please.
Complying when they knew the rules, then they would comply. So exactly. They don't want to go backwards either.
All right. So big thing in Congress, of course, is the tax reform. We talked a couple times about how that's affecting or could affect housing. The latest one that I came across was the effect on Fannie Mae and Freddie Mac, the two government-sponsored entities, which, of course, have the mortgage market by the tail. They're about, what, Joe, 90% of the market probably, as far as lenders selling loans to them. That's where they end up in mortgage-backed securities through those two.
Yep.
And they have been, since they were put into conservatorship after the fiscal crisis back in 2008, they've been run by the government, more or less.
Conservatorship.
And they took a bailout from the Treasury back in 2008. It was about $80 billion, I believe.
About the size of a payday loan for the average American family.
There you go. And since then, and then they were paying that back. And then in 2012, the Treasury, and under President Obama, decided, well, we need to sweep all of the dividends and everything that Fannie Mae and Freddie Mac earns, we need to sweep all that into the Treasury.
Right.
But it's only the interest, not the principal.
We're
calling it interest payments.
A golden goose.
Yes. And they were saying they're just sending us the interest. We're foregoing the principal for the moment. It's like we're forbearing the principal payment. So they've been sweeping this money, in billions of dollars.
I believe that there's a conspiracy here.
Yeah, you think so?
And that the conservatorship is actually being managed by the Sicilian mafia.
Oh, there we
Could
go.
be.
Well, it sounds
Taking a
It's
little,
very,
it's a little loan shark.
very similar business model.
It's a little loan sharky.
Yeah, it is.
So anyway, they've been sweeping this
What's
in.
the VIG?
They've gotten, they have gotten what, like $160 billion back from these two, the Treasury, and now there's issues. They also, as part of that thing in 2012, the Treasury decided they have to sweep all their capital back to the Treasury. So their capital, they've been selling assets off, loans primarily, reducing their capital buffer to zero.
Right.
Sometime in January is when they're going to hit that. They won't have no cash. If there's some kind of an emergency, they'll have no cash to pay any claims or anything out to anybody that bought mortgage-backed securities. So they're going to have to get a draw from the Treasury.
But they are a government-sponsored entity. So they're supposed to get an implied guarantee from the government if they need it.
Mm-hmm.
But we didn't mean that.
No, we didn't. We didn't want that. Yeah. So anyway, they're going to
do you this one favor.
So now they're going to...
On the day of my daughter's home loan, you come to me.
Yeah. This is created by us, I guess you could say, this problem. And now with tax reform, they want to reduce the corporate tax rate. Well, this gets a little technical maybe, but Fannie and Freddie still have to pay corporate taxes. And they're writing off assets based on a 35% corporate tax rate. And now they're going to have, if they have to go to a 20% corporate tax rate, that creates a cash problem for them. And they will then need a bigger draw from the Treasury down the road to continue to operate. So the problem that they originally had now, if tax reform goes through as is, just becomes that much bigger. And it's going to look bad. This could show up in the news, obviously, if the feds have to bail out Fannie and Freddie again for the tune of $100 billion or something, or whatever it might be. That's going to be big news, I bet.
Yeah,
and it's not a bailout. That's the thing. And this is why I totally support Fannie and Freddie seceding to Texas.
Let the Texans run things.
Yeah,
let the Texans
seceding somewhere. They should come out and secede to somewhere.
The irony of this is, I was only half kidding when I said it's the golden goose. We're going right back to Hans Christian Andersen's fable. Where you kill the golden goose and then you have no more eggs. And. We're going to hear Congress, folks saying, we got to get rid of these guys. They don't work. Yeah, they work too well. So let's kill it and stop getting any golden eggs at all.
Yeah, they work so good they send you about $4-6 billion every quarter, each of them.
Yeah.
Mm-hmm. That's how bad they work.
Yeah.
That's how bad they work.
Yeah.
Yep.
And so if 6 months from now you hear in the news that, boy, Fannie and Freddie had to get bailed out again because it's housing. They don't know what they're doing.
No, it would be the equivalent. It'd be the equivalent of, imagine if the government put on you 100% income tax rate, but then gave you a welfare check for half that.
Yeah.
And then said you're on welfare.
Yeah.
Yeah.
So the government comes in, it gives you 100% tax rate, and they take all your money, but then they give you half of it back to pay your bills, and then they go, well, you had to go on welfare because you don't know how to manage your finances. That's what they're doing to Fannie and Freddie. They're simply saying that they're a welfare case, but they're taking 100% of their ability to support themselves.
Sounds like Denmark.
Yeah. So anyway, if you hear anything about it, just take it with a grain of salt because it's not really true.
It's all posturing.
Yeah, exactly. So anyway, tax reform, it will be interesting. Now, the Senate is supposed to vote today or tomorrow on their bill. Hopefully,
it doesn't say good tax reform or bad.
Tax reform.
No.
It just says tax reform.
Because they haven't read it yet, they don't know for sure.
Is it good or bad? Well, it didn't say good or bad tax reform. This is not the good tax reform bill or the bad tax reform. This is just the tax reform.
It's like everything else. It's good and it's bad. For
some
corporate
people win.
America, it's
Some
pretty
people
good.
win. Some people
for
lose.
upper-end home owners, it's not so good.
I'd like to ask you guys. No, they're talking about a couple of guys, Congressman, I think it's Corker from Tennessee. He would like to have some kind of trigger put in place that if this doesn't work out as planned and there's less revenue coming in, that they can then adjust the taxes back, 5 years from now.
Love planning for that in my budget.
Exactly. That's what I was going to ask you. How would you like to plan for that?
Don't want to.
Let me guess. None of this applies to if you work in Congress.
Probably not.
Actually,
just a guess,
this time it kind of does because they still have to maintain a residence and in their home state, and so many of them do have home state mortgages, and it may well affect them. And a lot of them have second homes, and that will affect them.
But it's such a crock. It's such a crock. I mean, come on. It's no different than I know companies out there that portfolio special services people. They put them on the books because they can't give you their social security number. They can't give you their identity, their full identity information, because if you put that into the ethosphere out there in the database, they could be found and killed.
Yeah.
They're traceable. Things are hackable. So there are places that just out of their commitment to U.S. government service people, they just do these loans. They do them basically on their name and the proof that they work for the agency, right? It's the same thing for these Congress guys. There are the lenders out there, the banks that are doing them call it something else. They call it their Platinum Plus profile lending, and they claim to do it for doctors and everybody else, but they really built them to do the loans for these guys in Congress. And the idea that they're not getting specials, it's a boondoggle.
All right. Okay. We'll be back on the Dakota Housing Network and take another cold shot at Congress.
And Joe will tell us what he really thinks.
Okay.
Right now, 36.
Weekends with Twilight Zone Radio on SuperTalk 1270.
All right, we are back on the Dakota Housing Network in the crossfire with Stevie Ray Vaughan, Dave Floor, Joe Sheehan, Greg Larson, Jim Walsh on the board as always. Our last segment of the day. We were talking about tax reform. I think we kind of beat the dead horse there, and we'll just have to wait and see what happens with it.
Right.
This week, maybe we'll find out what the Senate does, and then because they want to have this done by the end of the year, have it on the president's desk signed, right, by the end of the year. So. Right.
Well, and if you guys find out I'm back in the mobile mortgage unit, it'll be because somebody from Congress called after my last little rant. And Joe's been suspended and back in the mobile mortgage unit.
No, we'll never suspend Joe from this show.
No,
never. No. All right. Now, another interesting thing that could happen is our friends at FHA. They got a new leader. That's an old leader.
Right.
In with the new, out with the old. Back and get the old guy.
Who came back?
Brian Montgomery. Used to run FHA back in 2005 through 2009. Did, I think, by everybody's standard,
did a great job.
Very good job.
Did a very good job.
Everybody likes him. He went to the private sector, and now he's back.
Very consumer friendly.
Confirmed. He's a smart man.
FHA under him had an attitude that if you could document, you could do it.
Yep.
That was their attitude.
And he did not. He didn't. Back in the 2005, 6, 7, when everything was going a little nuts, he didn't go crazy over at FHA. Say, boy, we're losing all this market share. We've got to gain that back. He didn't get stupid about relaxing standards. He kind of kept with what he had.
Yep.
And FHA really. What happened with that is they
performed very inexpensively.
They were able to be there when nobody else was in the mortgage market. They were still insuring loans. They were there, and a lot of that's due to Mr. Montgomery's leadership right prior to that.
Yeah, he proves he is the exception that proves the rule. Will Rogers' famous statement was, "The man smart enough to do the job isn't dumb enough to take it."
Yeah.
In this case, he is smart enough to do the job, and he's going to take it.
Yeah, yeah. And now the big thing with FHA right now is the mortgage insurance fund is on the forward mortgage side, the purchase mortgage side refinances. The fund does very well. It's the reverse mortgage side of things that is drawing that mortgage insurance fund down a little bit. But a lot of people are calling to cut the premium on FHA insured loans, which would help the consumer. It would be less cost, whether you cut the upfront or the monthly premium, especially that's going to reduce what your mortgage payment is every month. So it's a big deal. So that'll be his first test, is what will he do with that premium? Will he leave it in place or will he cut it?
And that's an important business decision, because although FHA isn't supposed to be the dominant option in the mortgage market, we want the conventional options to be that in terms of the health of the industry. It still is important, though, that FHA maintain a significant market share to pay its bills.
Yes.
And its bills is HUD Special Projects.
Yeah, that's right.
It's FHA would be fine on actually a beer and ramen budget. It actually runs really good on it.
Yeah,
but
that's the thing to remember. FHA is a division of HUD, and it pays for a lot of HUD's programs.
It's the moneymaker for a lot of stuff that has nothing to do with the homeowners on the FHA side. Yeah. But it is but the thing to restructure the fees is it can make more money if it can do more loans at lower fees sometimes. But it's a balance, because they want to maintain a healthy market share, not a dominant market share. Yeah. And that's so raising the fees and where those fees sit, it's not just a consumer decision. It's trying to be inside FHA's role.
Yeah. Right. One thing that he tried to implement back when he was the leader before was risk-based pricing. So if you're If you're a risky borrower, you're going to pay a little bit more. If you're a better borrower, you're going to pay a little bit less for that cost of that mortgage insurance.
Right.
So it'd be interesting to see if he tries to bring that back also, which that's part of what you just talked about, is he's pricing for risk and finding that balance on what would work. And I think he's a good guy for the job. So that's there's one appointment that kind of under the radar that the Trump administration made, but a really good, solid one. And
do you think we could ever get Dan Gomez on the show to talk about like HUD's perspective on FHA and the FHA appointment?
I don't know. We could give it a whirl. Yeah, I can. We'll see what we can do with that. Okay, I got another thing that's really kind of interesting.
Okay, shoot.
Mr. Floodman, the water guy.
You are the water guy.
You are the water guy. Greg Larson is the water guy.
Yeah, you're not talking about my little soiree into the Tribune lately.
No. We don't. We're not going to get into that. That's a more of a private kind of issue with the water resource district.
Right.
But anyway, Greg's the water guy. Greg, do you know what's the state that has the highest hidden flood risk? Meaning, it's got the state with more property as a percentage that are not in the 100-year flood zone, but they're still at risk of flooding.
The highest hidden flood risk.
Yep.
Okay. Let me think.
So if you get a mortgage,
I'm going to give you 4.
Okay.
That's pretty good out of 50.
It's got to be one of them. It's got to be New York State because of Long Island and Staten Island.
Okay.
It's got to be South Carolina because of the hurricane and the associated rains that cause interstate flooding. Florida or Alabama.
Okay. Well, the worst state is Arizona.
Sure, the Salt River. That makes good sense.
Boy, you didn't even have to look at the article and you got that right. The Salt River. That's exactly what they said. The Salt River is very flat.
Yeah.
And when it does flood because of downpours, it spreads out very quickly because it's so flat. And then they have a lot of canals that are built down there, and the canals do the same thing. They overflow quickly when there's downpours and put homes at risk of flooding. So that's surprising. There's 68% of homes in Arizona have a hidden flood risk to them.
Yeah, because the Salt River flows through both Phoenix and Tucson.
Yeah.
And so it would. Yeah. And you're right. They don't dam it. They don't try to control it. They just have stoplights on either side, and when it rains, they
Whoosh.
turn them red.
Is
stay
it
off.
one of the last unregulated rivers?
That in the Yellowstone, yeah.
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 But
There's only like a couple unregulated rivers left. I mean,
so I wasn't thinking in terms of the way the article posted it, but yeah, that would make sense.
No, after that, you have, Florida. 68% of Arizona's homes fit the criteria of this hidden flood hazard. Florida has 54% of its homes do that. Louisiana's 49, so you would expect those. And then Texas is at 31. You think that's flooded, but actually not that bad.
Yeah.
North Dakota was like 44%, I believe.
Well, it's because Fargo, Grand Forks, Red River.
Yep. I didn't check to see what the top 4 was, how close you got to that, but you're probably right with New York and.
Well, New York, no, probably not, because Manhattan,
which is Staten Island, right?
But Staten Island and Long Island are very flood prone. Just a northwestern surge can put those underwater.
Yeah.
And Lower Manhattan too, for that matter. But I mean,
yeah,
when you look at about what can be flooded, sure, Arizona, clearly one of them, and Alabama, because there's so much lowland that floods all the time. Louisiana would be in the same thing, but it doesn't have as much lowland as Alabama.
We saw both of those in Katrina, right? They experienced that with.
And the whole of Florida is so flat that that's all a risk. But that makes sense.
So what's the status of the flood insurance bill right now?
Really good, actually. December 8th it expires. The House and the Senate. I'm trying to think of the representative. He was shot at a softball game.
Yeah. I can't think of his name.
Well,
either.
he's the chairman of the committee on the House side that does flood insurance. He's back. And so the House and the Senate have agreed in principle on a new flood insurance bill, which is a good bill. It does some of the things we've said we need to have done. It will either get passed by December 8th or it will be extended for probably 60 days so they can write it and will pass. But in essence, unless something blows up, the bill is agreed to, and everyone who's kind of involved in it is saying, it's 90% at least of where we want to be as far as changing rates, changing flood maps, and the whole trick to that is some of it's got to be paid for because their technology on setting floodplain maps, which is elevations for who gets what rate, is 50-year-old technology, and they're moving it up into current technology, and that will be a holdup. But it's a good thing we're moving in the right direction there.
So do they see because of everything else going on with the tax reform, that would slow that down to get it passed by the 8th? That's one thing. It is not high priority to get it written before the holiday recess. Okay. So
because they have an agreement in principle, and they can extend the current law to give them time to write it.
Can they go 90 days?
They can go up to a year.
A year, okay.
But they won't because they want it out.
Yeah, so they'll do something short term, and then if they don't get it done. So they still have some stuff to write. So it
they have
getting it done by 8th.
They have agreement in principle, but neither the House nor the Senate. What they're trying to do is get it pre-written so the same bill gets marked up in both houses. And so
maybe the way it should be done.
You think?
That would be helpful, wouldn't it?
So anyway, this one is doing well, and it's a 5-year. They can reauthorize up to 5 years, and they're going to reauthorize the whole 5 years.
I hate to interrupt, but basically I just got a call from Mortgage Market Guide saying it was an alert to lock. So interest rates are moving up right now, and so if you're out there and you're wondering whether or not you should have locked your interest rate, you should call your lender right now. Okay. And basically on news that the tax reform bill is going to get put together in the next 48 hours. And so stocks are surging at about 300 points, causing interest rates to rise.
Okay. All right.
Sorry for the emergency announcement.
Well, hey, that's right on top of stuff here on the Dakota Housing Network, man.
It's kind of like from World War II, smoke them if you got them. Now it's lock it if you got it.
Yeah.
Lock them if you got them.
We have breaking news right here.
All right.
Jim, how much time we got, Jim?
We got about 20 seconds.
Well, we can fill that.
I'd like to shout out to my mom and all the people that voted for me.
Diane.
And my wife, Diane.
Yeah, okay. Well, we'll be back on the Dakota Housing. We're going to be here next week.